Hello, this is Carlos Asilis from Glovista Investments, here to share our market outlook for the week of May the 24th. First, a brief recap on this past week's major macro and market developments. On the macro front, releases confirmed the continued acceleration of economic activity. This was evident in the release of the Philly Fed survey, also the Taiwan export orders, Indonesia export orders, along with the details of the Japan Reuters Tankan survey. These surveys also manifested the importance and the role of supply bottlenecks, both in terms of printed price momentum indicators, as well as activity indicators. And thus, the clear message is that the underlying momentum of the global economy is one of acceleration, along with temporary or transitory inflation indicators. We embrace the view that, especially in the US, we're approaching a period of peak growth momentum, along with a possible peak in inflation momentum. And so in the case of Europe, we are not there yet, and neither are we there in the case of emerging market countries. Moving on to this has implications on the investment side, which we'll discuss momentarily. On the market side, a recap of this past week's major developments provides a picture of continued resilience for emerging market equities. Prices rose close to 2%, 1.7%. International developed equities, IFA in particular, 0.6%, while US equity indices corrected. The Russell and the SP500 declined by 40 basis points. The NASDAQ edged higher by 30 basis points. A major development this past week was the crash in cryptocurrencies. Bitcoin prices declined by close to 30%. In that environment, we of course also witnessed a moderation, a decline in commodity prices. Crude prices declined 2.5%, and copper prices close to 3.7%. In the period, inflation expectations have moderated. This is true both in terms of, or evident rather, in terms of inflation swaps and inflation break-evens. As we move forward, our investment thesis at Glovista remains unchanged. We favor value stocks over growth stocks. Globally, we favor emerging market equities. We continue to hold well. And also, we favor high-quality US tech and US value stocks. We are starting to warm up to the European, particularly Eurozone equities. And that's been a change over the last couple of weeks for us. Next week, the calendar is rich. We witnessed the release of April PCE inflation out of the US, a number of production sentiment indicators, Richmond Fed, Kansas City Fed, Chicago PMI, and Chicago Fed, and finally, consumer sentiment indicators, Conference Board and University of Michigan. Thanks for your time and thanks for your attention. Have a good week.